Costco has been on an impressive downfall lately, so what is going on and can we expect the stock to rebound in the near future? This is what you'll be discovering in today's video, where I'll make a full stock analysis on one of the world's largest retailers to see how they are able to generate their income, what are the most recent news that have been hitting them, and I'll finish by making a quick fundamental analysis followed by price prediction with different valuation models to determine what is the true intrinsic value of Costco. At the moment, this American multinational is currently the third largest retailer in the world by valuation, with a market cap exceeding $600 billion. The main difference between Costco and their two biggest competitors, which are Walmart and Amazon, is the fact that Costco requires you to be a member of their company before to be able to shop in their store, by offering two types of membership that are ranging between $65 to $130 per year. Costco is making a lot of money out of this income source, knowing that in their latest earnings report, they had over 140 million members worldwide. In fact, only over the last quarter, they've been able to generate slightly under $1.2 billion of revenue from their membership service. But the main reason why they offer this membership to their clients is the fact that this gives them the possibility to offer lower prices to them compared to their main competitors. In fact, since Costco is considered as a wholesale business that is buying different types of items in bulk, it gives them the possibility to make large economies of scale from their distributor, meaning that they are saving a ton of money compared to the classical businesses. This makes this company quite attractive for families and people looking to buy in bulk different items such as food, passing by clothes, and pharmaceutical products. And one of the other reasons why Costco is quite attractive for different people is the fact that they have extremely good promotion and discount, notably with their hot dogs at only $1.50 per hot dog, which is the price of $19.84. So globally, all of this make that over the past quarter, Costco has been able to generate some revenue of over $62 billion strictly from the sales of their different products. And this actually represents an increase year over year of 9%. So with these numbers, it would be pretty normal to think that Costco should have been growing in value lately, but we would be wrong. Even if the company has been able to slightly gain some value since the beginning of 2025, we can notice that over the past month, it has been plummeting, where on Friday, it has been down over 6%. And the irony of the thing is that what has been causing this downtrend momentum lately is their latest earnings report. While the company has been able to outperform the analyst predictions when it comes to the quarterly revenue, unfortunately, they have massively missed what were the predictions when it comes to the earnings per share, forecast at $4.10 per share and report at $4.02 per share. Overall, the reaction was justified by the fact that the investors were not satisfied by the profitability increase of this company, despite a slight increase of 2.5% in these EPS. Regardless of that, the brightest point in their latest earnings report remains the 9.1% growth in their sales that was fueled by a 9.3% gain in US sales and a strong 20.9% surge in their e-commerce sales. On their sides, their international markets saw weaker gains, with Canada up just 4.6% and other regions lagging further behind. But looking ahead, with some resilient US sales and their strong momentum when it comes to their e-commerce market, the outlook for this company remains pretty interesting for the investors. However, this remains a quite mixed feeling earnings report, knowing that they were not able to achieve the profitability that were expected by many investors. Nevertheless, it is important for you to understand that the market as a whole right now is quite shaky, with all the uncertainty and all the instability that we have politically, notably in the US right now. And so with the threats of potential tariffs that could be coming over the next couple of weeks and months, and with the potential of more wars that are raging all across Europe, this means that the market is filled with volatility, meaning that companies such as Costco could be fluctuating quite a lot more in the upcoming weeks. But now let's take a look at the valuation metrics of Costco to determine what is the true intrinsic value of it. Over the past year and a half, we can see a rapid increase of the valuation of this company, where their market cap went from $263 billion to over over $427 billion right now. This has also been translated in their price to earnings evolution throughout that same period that went from 41 to over 56 right now. So globally, with a high price to earnings ratio of 56, this could indicate that the value of this company would currently be quite overvalued. But now when we look at the profitability of this company, we can see that they have had some pretty low profit and operating margin over the past 12 months of less than 4%. But the more positive news for the investors has been the return on equity over that same period that has been close to 33%. Over the past 12 months, we've also seen that Costco has been able to generate some revenue of over $264 billion with some quarterly revenue growth in the past quarter year over year of about 9%, but with some lower quarterly earnings growth of only about 2.60% year over year. Another positive news about Costco right now is the amount of cash of about $13 billion that they currently have compared to a quite lower debt of only about $8 billion. This means that they are not too dependent on the fluctuation of the interest rate, where we can see that they currently have a debt to equity ratio of only 31%. Now, in terms of the volatility of the company, so how much does the company's price can fluctuate through time, we will be using, as always, the beta on a 5 years period. And with a beta of less than 1, this means that this company will tend to fluctuate quite less compared to the overall market, where, however, we've seen that over the past 52 weeks, this company has gained over 35% of value, and where the market on its side has only gained about 12% of value. Another interesting thing about Costco is the fact that they are also paying a dividend with a current dividend yield of about 0.48%, but at the moment we can see that this low dividend doesn't represent a big portion of their total earnings with a payout ratio of only 27%. Finally, as always, to determine what is the true intrinsic value of this business, we'll be using different valuation models, starting out with the Peter Lynch one, which is a simple formula where you add the future growth of the earnings per share with the dividend yield and that you divide with the price to earnings ratio. And so knowing that at the moment the company isn't giving a high dividend and that it currently has a high price to earnings ratio, this means that the results are showing that this business would currently be quite overvalued right now. Unfortunately, we won't be able to use our second model, which is the dividend discounted model, since we can notice that the average growth rate is bigger than our weighted average cost of capital. But now for the third model, we'll be using the discounted cash flow model, where we'll simply discount all the future free cash flow of this company to find what is its enterprise value. And so first we need to find what is the cost of debt, the cost of equity, and the cost of debt and equity to find our weighted average cost of capital. And with this weighted average cost of capital, we can find our intrinsic value, which would be indicating that the company's value right now would be quite overvalued. Finally, for the two last models, we'll be using the Graham's original value formula and the Graham's revised value formula. And once again, we can notice that the intrinsic value of Costco would currently be quite overvalued compared to its current price. So as you've been able to see in this video, according to the different financial metrics and valuation models, Costco would currently be quite overvalued. In fact, when we compare only the price to earnings ratio of Costco compared to its biggest competitor Walmart, we can notice that Costco is indeed quite overvalued compared to it. Also, for people that are looking to invest in great retailers to earn a lot of dividend income, Costco might not be your best option on this side, and it could be a better option for you, for example, to invest in a company like Walmart. Nevertheless, with all the macroeconomic conditions that we currently have on the market, with the cost of living that is through the roof, Costco remains an essential business for families and people looking to buy in bulk essential products such as food and clothes. So it's definitely not a company that will disappear in the near future, but personally, I wouldn't put my money at the moment in this company. But now, on your side, if you're looking to find another company that is quite more undervalued at the moment on the market, check out the video that's gonna be right over here, and I will see you soon. Peace!